Welcome to the Regulation podcast from the Institute of Regulation. My name is Marcial Boo, Chair of the Institute and a regulator myself. This month, I'm delighted to welcome a parliamentarian currently leading work on improving UK regulation. Baroness Dianne Hayter of Kentish Town chairs the UK House of Lords Industry and Regulators Committee, and they've just published a report on regulators and growth. Baroness Hayter has been a Labour peer in the Lords since 2010, and before that she was Chief Executive in the charity sector and also worked with regulators, including as a member of the Board for Actuarial Standards, and she was on the Pensions Regulated Determinations Panel and the Financial Services Consumer Panel too, and much more besides. Welcome, Dianne.
Thank you very much.
Well, I've said that you've published a recent report on regulation from your committee, but before we get into that, I'd just like to ask you about your own background in regulation. I mentioned some of the organisations you've worked with. Can you tell us about your experience and how it shaped your view of regulation?
Thank you. Well, I come very much from a consumer background. So my initial input and working with regulation was really to ensure that it worked for consumers. That's sometimes problematic. Sometimes the particular industry that's being regulated has a rather greater say than those for whom the regulation was set up to support. For example, I tried unsuccessfully to get the CMA when that was being set up to include a consumer panel, though obviously the general public interest also needs a strong voice in a regulator's work. I also have tried over the years to get regulators to benchmark their work, to compare it with similar bodies, and to enable both politicians but also consumers to be able to judge how effective regulators are in serving the needs of consumers and the wider public. So it's been from a consumer background I first looked at how effective regulation was.
That's very interesting and an important perspective, obviously, because there are lots of politicians who are talking about reducing the burdens on business, as you know, which we'll come on and talk about. But also, it's important to remember on whose behalf regulators are working, which could be, of course, consumers, could be the users of public services, could be taxpayers, citizens. So that's a very helpful and important perspective. And on benchmarking, I know that you say something about this in your report, benchmarking regulators, so we can come on to that. So I say that you chair the House of Lords Industry and Regulators Committee, and the role of that committee is in part to scrutinise the work of UK regulators. So can you tell us a little bit more about your committee and its work on regulation in general before we come on to the specific report that you've published?
Thank you. Well, the committee was set up in April, 5 years ago now, 2021, following a review of how the Lords did their scrutiny work as we came out of the European Union. Because quite a lot of what we now regulate in the UK was done by various European bodies. And therefore, we had an elected European Parliament at that stage that used to look quite closely at quite a lot of the regulation that was taking part. Therefore, once we'd left the EU, people realised that someone had to step in, if you like, for that oversight, and that greater scrutiny was needed over the regulations that were being, if you like, renational or brought back in-house into the UK. And that was when the idea of this was being set up. And the work of the committee was also to be able to, I think, look cross department. Very often you have individual regulators report to a particular individual department, but actually there's no oversight about looking at regulation either when more than one regulator can impact on a business, or indeed whether some of them actually might conflict or any of that. So the idea of having a cross-department way of that, looking at that, was also really important.
Yeah, I think is very important, and I'm very glad that your committee exists. And tell us a little bit about how that's grown over time, because regulation's gone up the political agenda, both for the last administration and this one. And the work of a committee such as yours, looking across sectors, looking across departments, I think is particularly necessary. So has the work of your committee changed over time, do you know?
It hasn't done a lot that really reflects that cross-department. I mean, we did a very important report on the building safety regulator, which in a sense is at variance with what I'm saying about looking cross-department. It was a particular regulator where, the committee before I joined it realised that it was actually not doing what it says on the tin. And so the current report, looking across the whole scene at regulators across department, is the first time perhaps that we've as strongly as that looked across the piece. And what it has thrown up is the lack of a central government review, if you like, of all regulators. It's quite interesting that the particular issue we're looking at of the growth agenda, in one sense, the regulators come under the Department of Business and Trade, but actually it's the Treasury that is driving this agenda. And the two of them have had to get together and have meetings in order to look at how regulators can work out what to help the Treasury with its policy. And I think, although we haven't particularly said that in our report, that shows a gap in governance about looking across all of regulators rather than doing it by department. But I think this is probably the first report that has flagged up that issue of cross departments.
Yes. Well, I think that's an important issue, and we're going to come on to that in a minute. But let me just say to everyone what the report is. It's called Time is Money, How Regulators Can Support Growth. It was published by your committee on the 12th of May this year. The government needs to respond within 2 months, I believe, so that's the middle of July. So we'll find out what the government has to say shortly. But before we get on to this issue of working across departments, which is really important, the title of the report is about growth, and you say in your report that regulation can both support and hinder growth. Can you just tell us briefly how regulation can either support or hinder growth?
I think it's got a bigger potential role for hindering growth, if you like, if it is slow, either in responding to in its decision-making, really, either that it doesn't respond fast enough or it doesn't engage sufficiently with the industry that it's dealing with. And I think that is one of the strong recommendations we're making, is that it needs to be, all regulation needs to be working at a faster pace and smarter. Otherwise, it could hold up both investment and innovation. Where regulation really can help and support growth is if it gives confidence to a market. And we've heard, I used to be on the financial services consumer panel, as it was called at the time. And I was very aware then, working across internationally, that very good regulation gave a degree of confidence in the market that made it easier, if you like, for people to want to enter our domestic market if they knew that the regulation was good, that it was effective, that it was fair and allowed competition, but in a way that industry could deal with. So good regulation, I think, gives confidence to a market. But where it is slow in responding to a market, either to market changes or to innovative changes, new entrants, if you like, then it can actually be a hinder.
That's great. A key finding, I have to say, regulation is not good or bad in itself. It needs to be done well. And as you say, when it is done well, it can boost confidence and provide certainty to business. And obviously, we need to make sure that it's not done badly. And that's what the Institute of Regulation is here to do as well, supporting policymakers. So let's come back to government then, because much of the report is actually directed at government, not at regulators. And you argue, in my view, rightly, that government should understand regulators better, the differences between the sectors they regulate. You say also that regulators are part of a wider regulatory system overseen by the government, and that regulators can be inhibited by legislation. It's the government's job to help regulators to focus on what matters, to set priorities, and also you say that the government's growth target is narrowly defined. So there's a whole load of stuff that you say there about the government. Can you just summarise for us how you think the role of government is important in promoting good regulation?
Yes, I think the government rather hoped that our report would come out with lots of recommendations for regulators themselves. And they may be a little surprised that we have pointed a lot of our recommendations to them. What government needs to do is make sure that if they are asking regulators to be less risk averse, to be a bit more flexible, then I think government needs to understand that it's really no good asking regulators to do that if they don't give them the political cover. Because what happens, all regulators say this, when everything's going well, the government takes the credit. But, one mistake by a regulator and they're hauled in front of a House of Commons committee and told off. And therefore, if the government wants them to act with a bit more risk-taking, if you like, then it has to provide cover for that. It similarly needs to review the legislation. A number of regulators are quite old, and some of their rules they have to work to are in legislation and means they can't sometimes be more flexible and adapt to a changing market. So we do ask that the government review the legislation, and if it is that is stopping a regulator from being more effective, that they should bring in legislation to change that. On the issue of being specific about growth, again, it's easy to say promote growth, but you have to look at whether that means in the short term, you could take some decisions that gave short-term growth, but actually might have long-term implications. And again, regulators need to be confident or sure of what the government's wanting from them. And they also need to be really clear that those particularly that are focused on safety are not being expected to in any way downgrade their focus on safety. And that could be over buildings or over the food we eat or the medicines we take. The government needs to be really clear that they're not expecting that they put at jeopardy, if you like, the things they were set up to do. So I think some greater clarity is what regulators wanted about, well, what exactly do you want us to do by the way of growth? And are you going to give us the political cover if in doing that we occasionally are then seen not to have been as safety conscious as perhaps the public then expect?
Yes. Well, goodness me. I have to say I agree with all of that, but I suspect that it's quite a tall ask of politicians who inevitably have short-term political considerations and civil servants who in sponsor departments who sometimes don't really understand regulation is beyond secondary legislation, and setting rules in place to enact policies. And the longer term regulatory stewardship that regulators themselves are thinking about in terms of stable markets, consumer protection, all the things that you've mentioned. And so how do you think this can happen in practice? Because it's all very well, as you say, for the government to call on regulators to be less risk averse, but then the kind of the hit is taken by the regulators in exactly the way that you've outlined, and governments and Parliament, for that matter, finds it hard sometimes to find legislative time to look back at old laws and revise them, bring them up to date. So I agree with the recommendation, but how can it happen, do you think? And have you had any response from the government so far to the recommendations that you've made?
No, not yet, but that would be very early and quick for a government to do that. Before I answer your question, I'd like to just say one other thing. I do think that we have to recognise that regulators should be either arm's length or mostly independent of government. And some of my experience of working in regulated areas is that sometimes the government wants to second guess or meddle, frankly, with regulators. They get too much into the weeds and they check that and processes rather than outcome. I hope at the end of this, we might look at the role of your institute, because I do think that there is something about the degree of independence of regulators that is also important. I think what the government can do is think about either the use, which they've suggested as well, of sandboxes. In other words, allowing a regulator to maybe pause some of their legislative regulation, or their normal rules, shall we say, to allow a bit of innovation. And I think that government can give, again, political coverage for some of that to happen. The other important thing is to encourage regulators to talk more, not just to the businesses that they are regulating, but to the relevant consumers or users or the public or environmental groups, so that they can work more on consensus. Now, we didn't mention that in our report, but I do think that regulators having a less us and them attitude to the industry that they regulate is something that government can encourage and facilitate sometimes, in a way that perhaps they've sort of taken for granted that regulators just go off and do it until something goes wrong. And I think a more ongoing relationship, we have suggested that every Secretary of State for their relevant regulator that comes under their remit should set KPIs that hopefully are output focused, and that they are in dialogue with regulators about that, about the effectiveness, rather than the particular mechanisms that the regulator is using. So I do think government can do more in that way to give confidence to regulators that they will be measured for what they achieve rather than the detail of how they achieve it.
Yes. Well, that would be fantastic. And as you say in your report, it's easy to see when regulators, when things in a regulated area go wrong, it's less easy to see the good job that regulators are doing to keep a market stable and secure and fair, level playing fields and all of those kinds of things. But before we move on to what regulators can do, you've hinted at some of that yourself in terms of communication. Just a word about this 25% target, the admin reduction target. You're quite critical of that in your report. And I think you say that it's basically too narrow and it's not measuring the right thing. Is that a fair summary of your view?
It is interesting that it measures the admin cost of complying rather than the actual cost of complying. I think an example we were given, I hope I haven't misquoted it, is that actually it's proving if you're making, for example, a fridge. It's only going to measure you should have a 25% reduction in the cost of showing the regulator that you're keeping to the rules, rather than the actual cost of making sure that your fridge keeps to the rules. And therefore, it might be more useful to say, well, are we actually measuring the right thing? The cost of proving it to a regulator, rather than the cost of complying with regulation. So that was why we wondered. It seemed a slightly narrow measure. And it's that usual thing, cut back bureaucracy. But of course, if a regulator is asked to show a government that it has kept something safe or healthy or whatever it is, then obviously they need the input from the industry being regulated. So it's a bit hard for the government to say, prove that the industry has done it right, and then saying, but make sure you cut that bit of the cost, but not the much bigger cost possibly of getting someone to, make their fridge in a different way. That might be the wrong example. I've never made a fridge.
Yes, no, you do use that example. I think it comes from the Food Standards Agency evidence where they say exactly as you've just said, we're having to prove that the fridge is of the right temperature rather than actually making sure that it is. So, yeah, that's and these are the lessons I'm sure that some people who were around 30 years ago implementing targets as part of the new public management thrust of the first Blair government, first and second Blair governments. I mean, these are lessons that I know that were learnt then about making sure that the target is the right one. Otherwise, you incentivize behavior that it's not actually what you're trying to achieve. So I recommend people read that bit of your report for that, if they're interested in that. I want to come on to the regulators themselves now, because your report says that there does need to be a stable, efficient regulatory environment. And you say, as you've just mentioned, that regulators need to communicate with each other, work better together, and that in some places that might involve having a lead regulator. Can you just elaborate a little bit more on what you think regulators need to do themselves to improve UK regulation?
Well, the big one is about regulators working together, either having a lead regulator, which you haven't got at the moment. You've got the possibility that someone can, if you like, take the lead in that they'll set the dates or that by which responses from the business has to be given. But they can't. They don't have the authority to then to take a decision on behalf of each regulator. I think it's particularly in the environment sector there can be more than one regulator that if you're trying to build a railway or something, you have to deal with. So I do think that there may need to be, again, some government input to allow regulators to actually allow a fellow regulator to take a decision like that. But actually, there's also some simple stuff. There's nothing more frustrating. And I think, I can't remember which regulator I dealt with once, when one of them was wanting things on a monthly basis and another one on a 4-weekly basis, or the equivalent of that. Actually getting all regulators together to have a very standard way of reporting in itself makes life easier. And they don't all do that, particularly ones that appear to be in a different sector, but may not be when you've got a new product that you haven't thought about. So I do think there are some things that regulators can really work across the sector. Coming back to your institute, I don't know whether they can do any of this, to try and make sure that it's easier, or as easy as possible, for business to be able to use the same information for more than one regulator. I think it's also important for the public, because if they want to check how a regulator's doing, they need to be able to access the information in a way that they can use it. We expect journalists to work on our behalf to do things like that. But again, it needs to be done as clearly as possible. So those are the sort of things that regulators can be doing across regulators within their own working environment. I mean, the use now of computers and AI really should be top of the agenda for all government and quasi-government bodies to be doing. Smarten up your own work and do it quicker. It seems to be something that everyone should be doing. This isn't particularly about the growth agenda that we were looking at, but actually all regulation needs to be effective. And I think that any board needs to be driving that, as in any organisation, actually, and there's no different. So I think that a real programme of, because one of the things that came up most strongly was the issue of pace. I call it speed because I'm very old-fashioned, but pace is the word used. That really everything now should be able to be worked much, much faster than was accepted 10 years ago. And I think that should be a priority across the field.
Yes, well, again, very interesting, because many regulators were set up in the first couple of decades of this century, as you know, in response to specific issues in particular sectors, set up by particular government departments under particular secretaries of state. And now, whether yourselves in Parliament looking across the piece, or ourselves here at the Institute of Regulation, again, looking across sectors, or for that matter in government, where the Treasury and Department for Business and Trade are working together, I think we're all seeing that actually doing things on an individual sector by sector or issue by issue basis is no longer good enough for a global interconnected world, and that we do need to get regulators talking to each other, learning from each other, and talking about the sharing data and intelligence in exactly the way that you're explaining. So I think that is the agenda for the 2020s, let's say, to get regulators data-driven, using technology, talking to each other, and that means at a parliamentary and a governmental level as well. So,
and if I could add one thing to that, talking to consumers. Again and again, regulators forget about the end user. Many of them don't have consumer panels. Many of them don't go out into the field and see how things are working. And they don't have it in some of them don't even have it in their KPIs or whatever they've got. to actually look at the effectiveness from the point of view of either the consumers or the environment or workers, for that matter, which different regulators are set up to do. If I was king of regulation, that's the one thing I'd like to add.
Well, it's a very important point, and I know that there are many regulators that do think about this. But it's hard sometimes because all regulators inevitably deal with the people that they're regulating, whether they're companies or professionals or, firms of one kind or another. And the relationship that they have with the people on whose behalf they're regulating is inevitably more distant. So setting up consumer panels, getting feedback, it's really, really critical, but quite hard sometimes. Just as a tiny anecdote, as you know, I used to regulate MPs. And I was regulating them on behalf of taxpayers, ultimately, citizens, voters. And I spent all my time talking to MPs about their business costs and their salaries and hearing their side of the story. But it was hard to get a representative voice of the people on whose behalf we were regulating, i.e. the people whose money is being spent, the taxpayers.
And another example is professional. I don't know whether your institute covers professional regulators, but I'm in permanent
yes, we do.
Dialogue with the GMC, the General Medical Council, which seems to be much more preoccupied with doctors' interests than it does with patients. As I say, I'm in permanent row with them over that. And if you are trying to regulate doctors and it is only in the interest of patients, then they really ought to be centre stage in what you're doing.
It's an important point and well made, Dianne. So thank you for that. Now we're coming towards the end, and so I'd just like to kind of pick up some key points. As I said earlier on, the government needs to respond to your report, and I look forward to reading what they have to say, and hopefully that they will implement the recommendations, because I think there are very, very good ones in there. Can you pick out some key things that you would like those listening to this podcast to take away from your report in terms of where you think the state of UK regulation is and what regulators themselves need to focus on over the coming period?
I think that the overall UK regulation is good. I used to work a lot in the European Parliament and some international work, and we were seen on the whole of being a very fair and equitable system of regulation, that it was professional, it was reliable, and there were ways of inputting into it compared with some other countries. So I don't think we should be unduly defensive about our system of regulation. I think the important points, in a sense, arise in much the same way as over the particular issue that we're looking at economic growth, that regulators must be end-user focused. And that could be the taxpayer, in the case that you've mentioned. It could be consumers. It could be patients. It could be travellers. The point of safety on the roads, like lorry safety. I'm a cyclist. I don't want that tyre to burst when it's on the road if I'm cycling behind it. So keeping the focus of why you've got regulation is something that I think regulators in their day-to-day work, if you're not careful, you talk too much to people who make tyres or drive lorries, and you don't think about the other road users. I'm highly involved at the moment about a particular issue, it's me personally, not the committee, on flashing headlights, on over bright, glaring, dazzling headlights. And all the regulations about headlights are basically set by car manufacturers and lamp manufacturers. And they take no account of the oncoming traffic that is blinded by these glaring headlights. Now, it is very interesting. How was it possible to have a system of regulation of car headlights that took no account of other road users? So that might be a small example. But I think it's one thing I would really like regulators to focus on is not just the industry they're regulating, but the wider environment. As far as the industry they're regulating, then I think the issues we've been talking about, speed, accuracy, a good relationship with the industry so that they understand each other has to be a priority for their internal working. But don't get too internal focused. Do remember the outside world.
Fantastic. Well, that's a great example, actually. You say it might be a small example, but this is the nitty-gritty of the things that regulators have to deal with. It's working out the conflicting interests of industry and the users and secondary users, as you say, people who are driving or just walking along the road and having these glaring headlights and needing to balance all of these different interests and try to do something like that as in an agile and efficient way too. So I encourage people to have a look at your report. Thank you very much, Dianne. Baroness Hayter, Chair of the House of Lords Industry and Regulators Committee. We will obviously follow up here at the Institute of Regulation when we hear what the government has to say. Good luck for the future work of your committee. We look forward to keeping an eye on that. I think it's important to have a strong parliamentary committee, as I've said, with deep knowledge of regulation because scrutiny and accountability matter. So good luck with your work. Thank you also to our sound engineer, Neil Bowerman of Bowerman Audio Production. And I hope that those of you listening have found the discussion interesting. Do let your colleagues know if so, and tune in to future episodes of this regulation podcast with me, Marcial Boo, where we will discuss other issues of interest to regulators. There's more material and events on the Institute of Regulation's website, ioregulation.org. And in the meantime, good luck with your own regulatory challenges. Stay in touch. Help UK regulation be the best it can. Goodbye.